Hello everyone, it's time for the weekly roundup in the cryptocurrency market. Welcome to hack.com's webinar for March the 17th, 2018. Actually, it's still March the 16th here on the east coast of Canada, but given that we have a very global audience, just want to welcome you here on this Saturday. A lot of us are still licking our wounds in the crypto market. Those of us investing in Bitcoin, Ethereum, and the broader altcoin universe have seen quite a bit of turmoil over the past month and a half. That certainly continued this week as the market, I believe, shed at its worst something like $87 billion. So we're still in the midst of a downtrend, the crypto tornado, as some people call it. Will we be emerging from it anytime soon? Well, it depends on who you ask. The analysis obviously gives a lot of mixed signals. From what I'm seeing, a lot of declines as of late are of course due to fear, uncertainty, and doubt, FUD. And on hack.com, our goal is to try to provide you as much as possible clarity on the market and to try to dispel some of the FUD related news headlines that often influence the market. So our goal, of course, for today is to give you a recap of the major events in the week and then to draw your attention to perhaps some of the important themes that could influence the market as we head into the next week of March. And my name is Sam Borgi, Chief Editor at Hack. If you want to contact me, send me a message at sam@hack.com or simply leave a message on this video and we'd love to chat with you. So the agenda, we like to keep it pretty simple on our weekly roundup. We want to give you a weekly review of what happened in the market and why it happened. We're going to, of course, focus in on the global cryptocurrency market and handpick some important coins that are making moves, whether to the upside or the downside. We want to give you a recap of hack.com, some of the trending articles on our site, and then give you an overview of what to watch or what you can expect next week from a broad market perspective. So we have been caught in a prolonged correction in the crypto market. Really, this goes back to about January when the market peaked at $830 billion. Since then, we've been in a significant retreat. We bottomed out in the first week of February at around $276 billion. Over the preceding 3 or 4 weeks, we saw the market rebound. We saw gains up to around $518 billion in the market. But since then, we've been back down again as regulatory fear, concerns over security, some nasty news headlines, a lot of BS as well, has led the market lower. So crypto traders right now obviously aren't as bullish as they were last year. Obviously, if you're a long-term holder, current values suggest that it might be a good idea to increase your holdings. Again, that's if you're part of the long-term bullish crew. I will tell you guys, though, if you are part of that contingency, it's going to be a lot harder to bite down and to grind through it over the next little while, because it seems like this tornado is going to be here for perhaps longer than a lot of us expected, given the trajectory that we saw in early January. So as I mentioned earlier, the market cap fell by as much as $87 billion between just over a few days. Actually, it bottomed at around $309 billion at its lowest. When I put this review together, the market was around $338 billion, as you'll see a little bit later. Bitcoin bottomed near 7,600 as the dominance index for BTC approached 43%. That's fairly substantial given that during the bull run that we saw early this year, we saw huge speculation in altcoins. So Bitcoin's overall market share fell to around 32% at its absolute lowest. It's gained about 11 percentage points since then. That's pretty significant up move. Ethereum has been relatively stable when you look at it, when you analyzed it from year to start all the way to, I would say, the first week of March. It was pretty much trading even. However, this week Ethereum fell sharply, falling below $600 for the first time since December. So even Ether had a rough week as the SEC expanded its scrutiny to the ICO market. And of course, many of you know that ICOs are dominated by Ethereum. At last check, something like 80% of all ICOs were launched on the Ethereum network. Of course, one of the big news items of the week is Google's ban on crypto-related advertising, which will begin, I believe, in July. I think they're going to let the current cycle run until June, and then early July they'll begin the ban. Obviously, that's pretty big news given that Google and Facebook combined account for something like 70% of all advertising or all ad revenue on the internet. A lot of companies, a lot of brokerages, a lot of platforms, ICOs, they routinely use Google for advertising. So without Google, we may see some difficulty for ICOs. We may see a bit of a downturn in the exchange community because obviously they advertise through Google, the various Google channels, as well as through Facebook, which also banned, by the way, crypto advertising. So perhaps we're going to be going toward maybe more content marketing, more emphasis on the major crypto news websites for banner ads and of that nature. So that's a pretty big news item this week, seeing Google ban everything related to crypto. We talked about the Bitcoin whale last week. I just want to remind you again, given the fact that he still has $1.9 billion to offload. The Bitcoin whale represents the creditors of Mt. Gox, and he's slowly finding the best price in which to offload BTC. He's a Japanese fellow. We saw $400 million sold since September. Still lots more to go, and that could influence markets in the future. Of course, we saw regulators continue to broaden their investigation. We've seen a lot of news lately about the SEC increasing its scrutiny, as well as various subpoenas being issued to the crypto community. Recent news suggests that the SEC is investigating dozens of blockchain startups as well as ICOs. We know that the SEC has been really making ICOs the center of its universe. You know, regulators, what they love to do is they like to create criminals, and then they like to hire people to go after them. So a little bit of a rejigging in the regulatory guidelines will create all the criminals that you want, and you can go after them and then justify your existence, right? So the SEC is going after startups associated with blockchain. I shouldn't say going after right now. We don't know that they're going after anybody. They're simply conducting an investigation. I don't want to contribute to the FUD. It's not my goal. They are simply investigating, but they have broadened the investigation quite a bit. No major conclusions have been drawn as of yet. Of course, last week we saw the SEC warning regulators, or warning exchanges, I should say, that they need to register with the agency if they do in fact provide security tokens. So some more information there about how the SEC is getting involved. Also speculation about a probe going on into crypto asset funds for conflict of interest. So the Bitcoin market looked like this. I put this chart together about an hour ago. We saw Bitcoin around 82, 83. I know earlier in the afternoon we saw an article at Hack showing prices around 8,500. So the market has declined quite a bit. It looked really promising here in early March when we were challenging for the $12,000 mark. You know, I was really looking at this level here from February 20 or February 21st. But alas, the FUD drove the market down again. And then we saw a brief reversal here before plunging to a low of around 7,600 on the exchange. Although, the market has been pressured quite a bit by overall developments on the regulatory side and on the cybersecurity side. But I mean, Bitcoin's overall fundamentals really have not changed a lot. I know we saw a very important release in the Lightning Network this week, a beta version that aims to bring more scalability and transaction speed to the Bitcoin network. So lots of good things happening, but a lot of concerns remain in the forefront. And of course, the global crypto market at last check was around $385 to $340 billion. You saw here March 12th, early this week, we hit a high near $400 billion before declining to a low of around $309. So we have opened up a volatile or a wide trading band as investors react to the news headlines. So that really, we covered it there for stocks. For cryptos, we can say a lot more about it, but I just want to draw your attention now a little bit to stocks. Obviously, we cover the broader financial markets as well. And the stock markets this week, overall, they declined, although they finished on a stronger footing on Friday. The S&P 500 closed at 2752.01, which is well below all-time highs. We saw the NASDAQ actually hit a new high earlier this week before fading in the final few sessions. A lot of the concern recently has been about the trade war rhetoric surrounding the Trump administration. It's actually more than rhetoric now. I mean, Trump has issued tariffs, signed orders that have essentially green-lighted tariffs on steel and aluminum products at 25% and 10% respectively. Of course, one of his aims, part of the America First strategy, is to lower the trade deficit. So China has said that it's not going to slap any kind of retaliatory measures, but it will act in its best interest if necessary. We know the EU has threatened with retaliatory tariffs about $3.5 billion worth should Trump go ahead and tax European goods, which seems to be the case. And of course, the VIX rebounded from 5-week lows as we saw some turbulence in the market earlier in the week. When it comes to hack.com, we are actively involved in giving you all the resources that we can. The ICO analysis once again picked up this week. Just a reminder, guys, a lot of these articles, they do take quite a while to produce. There's a lot of research that goes involved. So there may be a lull every now and again. Maybe I don't want it to go for more than a day or two. And it would be my preference not even to have a day or two without an ICO analysis. But sometimes that happens because we're writing again. And we have our writers who have different set schedules researching the topic. And then we release again. So you're going to get a lot more next week. Rest assured. In terms of the most read articles of the week, we saw the article I put together there on Bitcoin potentially reaching 29,000 this year based on forecasts, as well as Ethereum hitting 2550. I have another article coming up that talks about more forecasts in Bitcoin and what that could mean for all you long-term holders. We saw an article there on crypto road signs in conflict. An article from last week, I believe from last Friday, on cryptocurrencies falling 23% on SEC and the Tokyo Whale issues, or I should say the reality of the Tokyo Whale unloading funds. That was also a big article this week. We saw a crypto update that did well, as well as Radin's MTGOX timeline, which was a very well-researched piece. I encourage all of you to read that one if you want some backdrop on MTGOX and what that could mean today. In terms of what to watch for, I am putting more emphasis now, placing more attention to Ethereum. Is it a short-term breakdown, or will we see a continuation of the downtrend? It seems like the declines in Ethereum are largely due to the SEC as well as just headlines, because ICOs aren't going away. I mean, there's a lot of regulatory uncertainty in the US, but if you look at the numbers about how much they're generating, we're still in the billions, right? And we're well on our way to surpassing last year's record, probably in the next couple of months even. So ICOs are still going strong. Of course, FUD, keep your eye on that. A lot of fear, uncertainty, doubt in the market. Just pay attention to how stories are written. And on Hack, sometimes we do report on some of these FUD-related topics, but we typically provide a sense of sensibility about where the market might be headed. I mean, I personally am not bearish on cryptos myself. However, I try not to let that influence the analysis of the piece. But let us know what you think. It's certainly not. We don't have any vested interest in generating FUD for the crypto market at all. We are looking at the Bitcoin Dominance Index, how Bitcoin relates to the broader crypto market. We saw it hit close to 43% on Friday. We will see whether that goes up or continues lower moving forward. Of course, regulatory chatter continues to be top of mind for investors. And for those of you following monetary policy, the Federal Reserve will hold its second policy meeting under Jerome Powell this week, widely expected to raise interest rates on Wednesday. That covers it, everyone. I hope that this has been an informative webinar. Let me know if you have any thoughts or opinions or suggestions. We appreciate your attention. And let's keep our eye on the prize and let's keep moving forward. Have a great week, and we'll catch you next Friday or Saturday, depending on where you are, for another weekly installment of our webinar. Take care.